So let's have a look at one application area. In this case, it's sales. What kind of information we provide in the sales area. So it is first we start with an overview, sales with different variants, item sales, GL sales, free text invoices, and some information about customer or definitely company if we are doing it. So it's top right, it's always good to have a company, or we filter one company. Then depending on what matters for the businesses, for example, new customer sales or percentage of new customer sales, some statistics, number of invoices, average deal amount, quantities, selling price, top items and new items. That's interesting if you are more into the new customer or if you are more into the new item, and how much of the top 10 items are creating to you. The same KPI you can have top 10 customers. Profit or gross margin as it is defined by net sales minus cost of goods sold, and how the profit is growing comparing to the sales growing. You can see profit growth and sales growth, profit percentage. Here we have already one not so commonly used but very useful, gross margin return on investment. One pattern to cover here is delivery performance. Are you on time or late with the delivery? And if you are late, what is your average days late in delivery? We have the same KPI also in the purchasing. This is some overview for the sales. And how would I rate this? Well, when it's green, it's usually good. I mean, it should be good, right? So a lot of sales or trend is growing, like this one here is good. Now, don't be handicapped if you have current year and you see, oh, this is red. But in this case, we just filtered out, let's say, how was this January and February? And let's just select the January and February or one particular period here. So let's just wait this to be refreshed, and it will give us an insight. How are we doing year on year? So this is January and February. We can see, wow, actually, as it looks, it was not that bad. Actually, we have doubled the January, or January sales. You can see this is January only, or January and February. Let's see how it was compared to the previous year. So that's why it's good to have a year here. And you can see also how the data are changing over the year. So it was flat, but now we are really having a good situation here. So this is something that is useful when you want to see specific period. That's seasonality including in here. And apart from the sales information, we also want to see a quick overview about the receivables information and the right information, not to skip its turnover in days, because everyone will be looking at the receivable balance and overdue, but also how fast are we collecting money from our customers and payment terms, and also how fast are we moving item stock value. We want to do a lot of sales with very low stock, so this is turnover in days, shorter the better. Now this is pretty much a basic view, and apart from the overview, we also would look at the data on a monthly level, and closer we go, more details are we looking at. So for example, this dashboard has similar view as the previous one. It just gives us the insight about sales. So it's apart from the sales, we have rolling or moving 3 months, 12 months, item sales versus non-item sales. Then you have average invoice value. Okay, so other things are fine. And then we extend it. For example, here we have stock value, growth or decrease or increase on a monthly basis, turnover in days, which is something that's super important for moving items, inventory aging. So most of our inventory is I guess more than 1 year old. You can see this red here, it's more than 1 year old, and the green one is decreasing. So the new stock we are selling and the old stock is just not moving anywhere. And for example, out of stock items or percent of items out of stock could be, and some specific KPIs, gross margin, return on investment. This is something that includes the definition stock value and how much stock is producing, how much profit is stock producing. Gross margin, returns on investment. Investment is inventory value, and gross margin is gross margin. So the higher, the better. And you cannot just decide and increase it because there is latency in inventory and selling process. But once you have this KPI, you can check how good this is over time and which items are generating more profit and which are less. Cash conversion cycle. And this actually is one example of average stock value divided by profit. Actually, this is gross margin, return on investment explained. So why are we increasing gross margin? Because actually we are decreasing the value of average stock value. You can see we are decreasing it, and at the same time, double trouble, actually positive, we are increasing the profit here. That's why this is going so steep up here. Less inventory, we do less with we do more with less stock here. Standard part is this receivables part here. Now, when we are doing the analysis, it's common that we are focusing on a root cause of events, and when we are looking at the sales, we just narrow down basic sales. So you can see this dashboard here is focused only on sales, and as I go also from yearly sales to monthly sales, you can see that there are more and more tables that we show in the view, and sometimes the tables are really good for information, and sometimes they're good to be used as filters because you want to see how are domestic customers doing in this period, for example, compared to the foreign customer and so on. So apart from the numbers that you can see here, they are used also for filters here. Okay. Now still we are in the overview, and one very important aspect is additional currency. And when you're using a reporting currency, it means that all the reports are available in reporting currency. What it means that if I'm looking at the reports here, and these reports here are in the reporting currency, and these reports here are in the local currency. So you get always the set of both reports, and depending on the nature of the business, you are going to use either one or other report. So it's important that you know that at any given time you get two sets of reports. Either you have a lot of inflation, for example, and then the gains in the local currency are not that effective in the reporting currency, or you have international business where you want to consolidate business in corporate or reporting currency. So just a quick sidekick how the reporting currencies works. This is setting in your dynamics, and the calculations is done in your dynamics, and the the calculation exchange rate are in your dynamics, and the last available exchange rate on the date of transaction is used for converting the local currency into the reporting currency. So that is the way how the transformation work. And you ask, is this the only are these the only measures about the reporting currency? Well, no, there are about 250 measures that are showing only the reporting currency information here. So it's really well supported for this. Now we are going through the sales, and we are discussing the concepts. Maybe a little more we'll spend about the sales. We'll go fast through our application area here. So another aspect of doing the analysis is doing some comparison. In the sales, we have sales budgets or sales forecasts. So you're doing the comparison against the customer sales or item sales. More often it's about item sales, but sometimes we have both, and you want to see immediately where are you dealing it. So we are having some issues here that our sales budget on year-to-date basis 30% behind the last year or the schedule. It can be better than last year, or if you're used to looking at the index, it means 1 minus this. So index is not used that more. Variance is better because it gives you positive and negative value, while index is 100% is same, and lower is less, and above is more. So it's minus and plus is better to use a variance than index here. And the visuals, you can see the visuals on a monthly level and on a cumulative level here. And of course you want to filter and check which part is performing or not. So still we are looking at the sales area and the reporting, but this is applicable to all application area. So we're not going to spend, and I'm not going to explain every report all the time. It's more about the concept of the reporting. One and most important dimension is date, the one and only date. Date has a lot of attributes, probably 30 attributes, at least 20, 30 for sure. So you are doing all kind of comparison, but first you have to know what is the date. And in this dashboard is current year. So another dashboard below here is current month. So there is not a good idea to have a filter and change the layout of the year, because it will also change the granularity that you want. Current month is by date and current year is by month. And yes, you can always drill down, but how would you analyze 365 days? Doesn't make sense. You can have top date or something that you would like to do, but it doesn't make sense. So you can see while we are here on a year, it still includes some of the reports in a chart-like form. Closer we go to a shorter period, more we are looking at the tables, less we are looking at the reports. And also one thing that is quite visible here, we are having quite a lot of KPIs. As you can see here, sales, year-to-date variance, number of deals, profit and profit percentage. This is gross margin, days late in delivery and amount late. Then we are blending in some receivable information and customer exchange. So this means we increase the receivables, and this is decreasing the receivables, which is great. And customer turnover, these are some specifics. Top 10 item sales, gross margin, return on investment, stock value turn, sell-through rate, and how many buying or new customers we have, or potentially new items. So we can pick more information and put these KPIs that are important for us into the KPI like this, because what we measure is what we change. This is something that is known to everyone. Now, current year, you can see has some charts like, and of course, whenever we change a layout of the report by selecting a member, the shape will take, this is Power BI. I will not spend much more about this. This is expand that we do. So definitely have one layout of the report for current year, or more of them for current year. For current month or current quarter or previous quarter, they deserve a special report, definitely. So it's better to click, for example, from current month. If you are the first week, nothing maybe have not happened like this. We have 25 days, which is great, should be simple. And then you will use a lot the previous month. I know that we can have just one button here quick, but believe me, it's better that you have the two reports separately, because over time you may have also some small minor changes between the layout of the reports between the current month and previous month, and you are looking this a lot. And then concept about reporting. Now this is kind of interesting. Over the years, we found out the concept that works, and I will explain this to you. It is applicable to any entity. In our case, entity in focus is customer. It is applicable to items, to stores, to vendors, to GL accounts, to any entity. Most simple is to understand, let's say, in the case of a customer. So what do we have here? Now, first we are bringing the data in a table, and this is without the date filter in terms of defining specifically current year, current month. It's the filter that you can use at any given time, and we are doing the comparison between different customers. So it's a customer table and some grouping of the customer. You can see these are grouping which are filtering the customer by some attributes. So this is customer country. I know this is very simple, but it's just something to explain. Customer discount group. Some of them do not have discount group at all, or the retailers, for example, in terms of the discount. Okay, and then there are posting groups. Of course, most important is the customer posting group, or item posting group, or vendor posting group, which is always the most important property in terms of the business, in terms of the finance. They define also different balance sheet accounts, and the KPIs that you can see here are referring to this. So foreign customer should reflect only foreign customer. Now, this is nothing special. interaction between the two visuals. That's clear. But what is important is that first we start with the table, and then we are looking at the same KPIs by date. And this is good because we see the trends. We start with the view where we're in a table, and then we go to see the trend. And this is the whole company. Now we want to see only local customers, for example, or we want to see some specific group of customers. That's all attributes grouping is all about. So you can see easily that February was good and we are growing fine, and yeah, also reflects slightly on our receivables here. You can see when we are growing a lot, the customer owes more than previous period here, and information that is available, it's all in colors. I will not go into the details because there is quite self-explaining. And you can see here, this is a date, here is a customer group, and entity company. One or more companies you can have. Mostly we have 200 companies, so in this case that would be quite a long list of the companies used. This is one aspect of the data, customer by date. We had customer table. This is the starting point of the data. And then we want to see the relationship between the balance sheet and profit and loss in a chart-like format. So this is not this one, it's customer chart. So this is this one. So what do we have? One category is net sales, which is a profit and loss category, and receivable balance is the balance sheet category. And the relationship between these two, how much are we selling and how are customer paying our bills, is turnover. Shorter the better. So definitely 180 days is not good. In this scenario, 35 days is much better. These are static information for the selected period, and you can see these reports here in a format over the period of 2 years. And again, what do we have? Sales and receivable balance, where these data are showing some trends. If you want to see, let's say, German customer, okay, then we can see the German customer. If you have another idea about the grouping of the customer, this is something easy to do. So here is by customer, you can have a customer group, by discount group, by segment, anything that comes into your idea that best reflects your grouping, you can use this, but at least you have something to start with. So what is the point? You can see the data in this relationship here. They are nicely colored, but you can also see the trends. So the trends is important because if, for example, my receivable balance, which is red, are going to grow and the sales is flat, then that's not a good customer, because sooner or later we'll be having problems by collecting the receivables. So for example, let's say this customer here, it's really not giving us a good sense, because maybe we not even have such a customer in this demo case. But when you see the data are going into the scissors, like receivables are growing and sales not, or inventory is growing and sales is not, in terms of the managing inventory, that's where you need to have a closer look. So the visuals are really very good. Tables give you quick information, but visuals will give you a good trend what's going on between the two categories. Just one category sometimes is good, like sales or profit, but it's also good to see the relationship between the two categories. Okay. So this is about entity. So we have a tabular view. This is step number one. Then we are having the same information by date. And this is the one that is showing the trends. It's easy to digest, and we have the decision will be done by colors. Green is good, red is bad. And then we have the information about visuals, which is a combination of this. And then there are different extensions of this. So for example, if your nature of the business is that you heavily rely on top customer, so you can see this will help you a lot. Top 3, 5, and 10 customer, how much revenue in selected days they make to you, and this is it, and how much revenue they make to you in the current year, because how vulnerable you are. Now, the benefit of having few customers is cost of doing business is low. The handicap is you are vulnerable, because if 10 customers walk away, then you lose half of your business. So this is good to track, and this percentage is 3, 5, 10 can easily be changed, and you can change this by any other number here. It's not difficult part here. And if I just show this formula here, let me just go into the formula, because formula here for this doesn't really matter. We didn't change the formula, and we go for the sales, and we go for the receivables here. Okay, new customer, lost customer. Let me just look for top customers. Top customer. So where do we have this? Okay, here it is. So this is ranking. That's another thing. This ranking and item ranking, and here it is. Okay, yes, so here it is. So item rank or customer rank, doesn't really matter whether we're looking at the customer sales or item rank. So I'll just explain this real quick. It's percentage, shows us percentage wise division between the item rank top 10 and total item sales. So what is item rank top 10? How much are 10 customers contributing, or how much are 10 customers or items contributing? This entity, item, or customer can be easily changed. And this is then a top 3, you can see, or top 10 or top 5. It is sales in the period divided by item sales, where items are then put out of filter. So top 3 items where the filter are against all sales. So 3, 5, 10. If this is too small of a number, you can see all you need to do is change this number here into the ranking, and then it will have also the ranking percentage this. So this is important to know how it's good to have low cost of doing business with few entities, customer, vendors, or items, but that's also meaning that you are vulnerable. If something goes wrong with item, customer, or vendor, then you are going to be hit. So this is something that it's good to have the formula available at all time. So this is about it. It's available in all application area. We are looking a little closer into the sales, but the concept is same across all application areas. So we are not going to spend same details in all other areas, for sure not. So we are going to check customer 360. So this is another aspect of gathering information from sales into everything related to the customer. Maybe not everything. We may have some additional transactions related to the service or to some other aspects, and it's easy to do. We are going to rely on data based on the table, based on the chart, to see some trends. And what's important here is that we also invented, not really invented, but just put into the dashboard customer ranking, where this customer, this is selected customer here, this is a selection button. So if I just select this, for example, I have all customer, but if I select one customer, okay, it's going to change the data. Let me just come back with one, just randomly selecting the first one, and where the data are refreshing. So you can see because we may have 100 customer or 10,000 customer or more. So how do we know if customer is important to us? How do we rank the customer? Now, we have two options: ranking, doing it absolute value, so it's 1 to number of customers and something in between, or a relative. So it's kind of better to have a relative ranking, because you may have 100 customer today and tomorrow 1,000 customer. So if you say, look, this customer is ranked 35 percentile in the sales, so you will know over the time what it means. Of course, behind the scene is also the ranking that is based on the number, not percentile, but the count or the value that we are looking at that time. The more customer you have, the number may have a different impact on your information here. So ranking as a percentile is better. So 1 is top and 100 is bottom here. So you can see And also one aspect of doing the analysis, when you're ranking an entity, customer, item, or vendor, it's not only one attribute. So for example, this is how much you make, how much it is growing absolute term, how much it's growing in relative term and relative term percentage. All kind of things are important, and how much profit and profit percentage you do, how much troubles you have for a relative percentage, and is it difficult or is it to collect receivables from this customer here. So ideal everything would be one, but of course more customer we have, they are different. And all the information here at the document and in this layout go to the document layer. So if we want to see quickly, hey, what is this quarter, and that it means that we'll go to a document level. We have top 3 documents, top bottom documents, and also when it's interesting here, when we have information about 9,000, it's overdue. We can see documents are here. What are the documents open here? So having customer 360, item 360, vendor 360, store 360, it's very good. And you put the information in this layout that is important for you to track. So we provide this template, and you can always easily adjust these templates to the need. Now, we have spent a little more time about explaining reporting basics, and we'll just go really quick through the same concept for items. So we have item table, voila, with a lot of KPIs here. Item aging, items stock that is not moving for more than a year. Happily, we don't have it. And then we have information about the item date. Okay, and this is, as we said, the view by date, where the colors are showing us the trend. Top items, like we had top customers, we have top items. So this is something also good to know. And this shows us the trends, top 3, 5, 10, or the number that you have here. You can have a look at your time. And customer, and our case, item chart, relationship between the net sales, which is a balance sheet, and profit and loss, which is a stock value. So this is not really successful selling, I would say, because we are using a lot of inventory to achieve the pool position in our sales. So that's reflecting as 365 days turnover here. And yeah, you can always go and here, and you can say, okay, I want to exclude this because this y-axis is taking all the glory. And then you can go and continue the analysis with other ranking items. Okay, this is something that I unintentionally filtered. And this is where you can interact with the reports here. You can see the layout, or I hope I will not get lost here with these reports because the dashboards are very interactable. Oh, we are back here. So you can see the trends between the stock value, which is red, and sales, which is gray here. And this is the layout that we are already familiar with. Now, apart from the customer and item, then we are looking at some new interactions. So how are we doing with the new sales? So if I just go really quickly for the beginning of the reports and check dashboards by year. So I'm just jumping for a second here. If this is important, if new sales are important, then you put the new sales and the new items and new customers as a percentage on the top dashboard. And when you have here, you can go not analyze, but you can jump to the report that will fetch you to the new customer. New customer. Okay, where we are. New customer, new sales. This is it. This is something, the benefit of clicking through the report will also pass you the filter. So you will automatically have that particular item or that particular customer or entity that you're using for. So what do we have here? In our business, we are looking at this year and this year data only. So we have only 4 new customers and 1 new item. So if we just go and set last year, so we can see a little more dynamics. Okay, last year should be also filtered by date, and I just see the data. So we have 6 new customers. These are 6 new customers and 2 new items. Okay, not really great. 1% of new customers and 1.3% a lot of new item sales. So whenever we have some data, the impact of new business is important, and where does it happen? In which customer, in which item? You can do the cross analysis, so you can see which item category is fetching you a new business or which customers are bringing. By filtering, by clicking of any category, the data will take a shape and will give us this information. Also, you can see that regardless on the new item sales, how many new customers did we have in this particular item, and it means that we have 17 that previously didn't buy item, but they are not categorized as new customer sales because or new item sales, because this item has been already sold before. And what is the criteria? It's the filter that we are using in this case. This is the filter. Prior to this, we didn't have any sales. That's the criteria of new. And that goes more into the details about new customers, same like new items. You can see a little more specifics about customer types. We can see item category, what they're buying. Then we add also buying customer, returning customer, new customer, and one-time customer, plus temporary lost customer for a week, for a year, month, 3 months, 6 months, or a year. So what is a temporary customer? Let's say I buy item in January, so in February I'm temporarily lost. I didn't have repeat business until I repeat the business again. Then I'm qualified as a returning customer. In between, I'm lost customer. So that's the theory behind this. And we can go into the very details about the new customer, so you can see how many aspects you can analyze. This is just one pattern about a new customer analysis. So where the new customer are coming, what are the returning customer, what is the relationship between these two, top 5 customer lost, top 5 customer by item sales, by total top 5 customer, can be also 5 or 10 or any number that you want to have, and some trends for temporary lost customer. These are not lost customer, but temporary lost customer. Hopefully, of course. If they are lost customer, then you can't do nothing about it. So this is one aspect of doing the analysis. And there is another aspect of doing the analysis is for how many days we haven't sold specific item. If this is, we are selling for an item. So this is item sales in this period, and this is how many days passed since last sales, or how many days passed since last customer transaction. And they have some patterns, and we want to analyze these patterns. So this is something where can be interesting, where you are seeing customer changing customer habit in terms of which items they are buying. They are still doing well, but they are changing assortment, or you're not successful with some selling strategy because, let's say, competitor across the street opens a nicer, better shop, and they will take the money here. So this is something where assortment is very important. Even if the whole numbers are great, then the last sales transaction will tell you what is the change in the assortment so that you can adjust your offering to this. So even if the numbers look great, you can see the change in assortment, and you don't want to be stuck with unsoldable inventory. Few more things to look at the sales. So geolocation, of course, that's important. More information that you gather from your dynamics, more information you can display. In most cases, we are looking at the data by country, or if you're local, by city or geolocation here. So you can see this layout is automatically set up by sales by country for European customers, and this is a domestic. It's a preset as a UK as a domestic customer to see where we are doing business. It's very visual, it's very simple. And another thing is that when we are doing this analysis, the base measure is net sales. However, based on the net sales as a measure, we provide way more information here. So if we look at the values here and we would like to bring more information about the sales, I can tell you there are 52 time intelligent variances of a net sales. Most simple are 3 and 6 and 12-month moving average that we are displaying here. There is year on year, year to day, last, previous, and so on and so on. So based on one measure, you would not believe 52 time intelligence measures are available in BI4Dynamics to show you the trend. Maybe you need 3-month trend, a yearly trend, or anything in between. This is something that is already in the BI4Dynamics, and you can just use these KPIs here. And it's easy to create new KPIs. It's just important that you have the base measure. These measures are scripted very, very, very easily. So this is still sales, and now we're going to look at some of the patterns. Gross margin return on investment gives us the information between how much productive our inventory is, so every stock value divided by profit, and then we are looking it by a period and by different items. So this is definitely sport equipment is great in terms of the generating the profit, and January was great. Last year was not so good, but we are starting good in this case. Scatter chart is bi-dimensional chart where we are looking at some KPIs that change over time. So one dimension is date, the other is anything that you choose. In our time is profit. So yeah, it can be interesting. These are items, and these are previously we see customer group. So this is something to play around. And another very ERP-like or operational information is about our delivery performance. So what it tells us, let's go to the details before we go to the big picture. Let's explain this on the detail level. By the way, spoiler alert, the same information is available for purchasing. So I'll just explain it only once here. So let's see the January for our customer beef house. So we had 3 shipments, 1 return shipment, and this shipment was 2 days late, this shipment was 1 day late, and this shipment was 1 day late. So why do we have 1.3? Because this is an average based on the value here. So posting date and days late is transformed into the days late. And when you have 1.3, because we are calculating the average, it means that we took into account also the amount. We are doing the days late based on the amount. We can calculate also amount late or quantity late. So at the end, we result what is the total amount late, or in terms of the lines, or in terms of the quantity. It depends on what you're looking at. So over the period, you can see this was a good month, 1.6 days late, 40% late. But next month, 90% of our shipment was late, on average 2.9 days late. Not a good satisfaction score at the customer here. So these are the demo data, and the data in real life can be different, hopefully, because this is not really good, because 30% of our shipment is late, on average 2.4 days late. And we can see where we are late for which customers. These customers have been delivered always on time. And we can see some patterns. Is it depending on the category, item category, or customer geolocation or relationship that we have here? So this is something for you to find out. And always you will have the information about the delivery performance that goes to the document level. Let's say sales order line, it means we have a date information, we have customer information, we have item information, and the document information. So based on all this information, we are able to see all the KPIs about our delivery performance. And by the way, the same information is available in the purchasing part. So it's absolutely the same to score our vendor. This is a non-financial score, but it's important. If you have a lot of delivery lates, then you have to keep higher stock, or you may go away from the business. Open orders, nothing special. You want to see the open orders. This is something available. And then there are some specifics in Dynamics Business Central. Services or resource table, we can see this information about and item attributes and customer attributes. So why is this important? At the end of this report, we always expose what are the attributes, We may not have put everywhere all the tables into the reports, because you can see here we have 8 and probably we could bring another 8. But this is just something that's already nicely structured and colored, so that you want to analyze by item discount group, or it's irrelevant, you may not use it. So different from business to business, you'll just copy paste and paste it into the report page. So the same with the customer attributes. You can see they're nicely structured. So just here to be copy paste and used into other pages. These are auxiliary pages, not so much to be analyzed by, but good to be used. Now, last in this case are financial or global dimensions. So this is like cost center, department, line of business, product group, or anything that is financial. And it's available in Business Central up to 20. And we can have as many as global dimensions as we want if we program it, but usually 20 is just fine. So this is something where financial information come into the picture, and the grouping is, it's not really financial, but the point is that this information also is available in the financial area. It means that I can use financial information and combine it with operational information. Financial information is available everywhere, in inventory, in sales, and in the finances. So when I'm using the finances, I can do additional operations to make them even richer. So financial dimensions are great, and they're especially used or used a lot also in the general ledger, in the finances. Last but not least, it's also important to know what we are dealing with. So in this case, when we are analyzing, actually I should start with this, is what was the last time we refreshed our data. So this is refreshed was like 15 hours ago. 15 hours ago, so data are fresh, they are not from the current date. And it's also good to have some information about instance name. Then we have the name of data warehouse and semantic or tabular database, some setting of the data, and some setting of the date. Date is very important. So how are we compressing data? What is the start, end, and some license information or information about SQL. In this case, we are residing on a SQL, okay, and some information about this. So this is more important part, is to know when the data have been refreshed, and based on this refreshed data, we know that if it took, let's say, if it takes half an hour, so all the data since, let's say, midnight are inclusive in this report here. So this is always good to have in every report. Or if you're processing every day in the morning, 8 o'clock, you don't really need to know, because you can be sure the data are coming fresh to this.